Now, Michelle, when it comes to investing in equities, our next guests agree Europe, Asia and emerging markets are the place to be. But are investors getting too complacent with the current bull run? Joining us now for this transatlantic panel discussion, we have Bob Parker, Vice Chairman of Asset Manager at Credit Suisse. He's with me here in London. And Emily Sanders, CEO of Sanders Financial Management, is in New York. Emily, Bob, good to see you both. Bob, look at this. This week we've had two record closes on the Dow. We've had Treasury yields fall 11 basis points. Is there no risk in the world left? Is everybody overly bullish?
Let's look at the factors that have been driving markets over the last week. First of all, in the bond market, I would argue that 2 to 3 weeks ago, the bond market was looking technically very oversold. This week, we've actually had a very benign statement from Ben Bernanke. I think he has assured investors about the outlook for inflation. A number of other central bank governors, and notably Mervyn King at the Bank of England, have also been making positive comments about the inflation outlook. Therefore, I don't think it's surprising that we've had this bond market rally. That bond market rally obviously has been a supportive factor for global equity markets. The economic data that we've had out over the last 1 to 2 weeks has also been positive for global equity markets, and there I would highlight the much better than expected GDP numbers that we had out of Japan in the last 24 hours. Corporate earnings numbers generally have actually beaten consensus estimates. If, for example, if we look at US corporate earnings, it looks as though fourth quarter 06 year on year will have come out eventually at about 13%. The consensus originally was only about 10%. Likewise, European corporate earnings, on average, we're going to be coming out somewhere between 13 and 15%. So the answer to your question is, yes, I can see a number of risks down the road. Yes, I can see a number of markets where valuations, particularly in emerging markets like China and India, those markets are now looking very stretched. But as at now, the market has been very strongly supported by this raft of positive numbers.
Emily, do you see risks, and if so, where?
Hello, Ross. Actually, I think that Bernanke's testimony the past 2 days was magnificent, and he did an excellent job of reassuring the market without all the Fed speak that we used to get from Greenspan. So I think that the rally that we've seen is due to the wash of global liquidity that's circling the globe, and that's here to stay for a while. Even if Japan BOJ raises rates by 25 basis points, it's still not going to dampen the carry trade, and all of that cash is just flowing around the globe looking for a home. And so, yes, there are risks, but until the global liquidity situation dampens, which shows no sign of it doing, I think that all the equity markets throughout the world, particularly emerging markets where there's actually a lot of economic activity booming at a very fast rate, is promising.
Emily, this is Betty Liu in Asia here. I want to ask you, though, given the rising interest rate environment here in the region, how much would you allocate an international portfolio to Asia?
Of the international portfolio, we're allocating about a third to Asia, and in that we would include India as well as an Asian economy. So about a third in India, maybe a half in Europe, and 25% or so in Latin America.
Bob, it's Michelle here in the United States. How do you give a regional breakdown in terms of asset allocation?
Well, I actually think that regional allocation, I think one actually has to get into more detail. For example, on Asia, I think you've got big divergence between markets like Taiwan, Thailand, Indonesia, which actually currently I think look cheap. I would come back to my earlier comment that the Chinese market and the Indian market short term are showing the same sort of characteristics that we saw last April before we obviously had the May correction. So I think in terms of regional allocation, yes, we think that one has to have a strong position in Asia, but I do think that Asian portfolios have to be reallocated in favor of those countries I've just mentioned. Also, in terms of sector, I would also focus on Taiwan. The reason there is because globally the tech sector is one of the cheapest sectors given its underperformance over the last 2 years, and obviously Taiwan has that very strong tech bias. In Eastern Europe, I think one interesting market is Turkey, where clearly we had major macroeconomic problems in the second quarter of last year. I think those macroeconomic problems are being addressed, and therefore I think the market now is actually looking reasonably low risk. Russia clearly is, given that about 80% of the market is linked or highly correlated with commodity prices, you have to take a view on commodity prices, which we think are in the process of forming a base after the last 6 months correction. So I actually think the rebuilding positions in Russia currently is interesting.
Okay, Bob, we'll take a pause there because we've got a bit more to come from both Bob and Emily. We'll take a short break. When we come back, have we got a bubble in China and more emerging markets? In a few moments with our special panel.
This is CNBC's Worldwide Exchange, broadcast live from Asia, Europe, and the United States.
Right, let's get straight back to our Markets Outlook panel. We have Bob Parker, Vice Chairman of Asset Management at Credit Suisse here in London. Emily Sanders, CEO of Sanders Financial Management, is in New York. Emily, let's just pick off with you. You've already talked about your views on how you're bullish for global equities. A number of stocks that you like particularly, Wilshire International Real Estate and Tata Motors, Indian Motors Company. Why do they particularly highlight your views?
Yes, Ross. Well, getting back to the global liquidity theme, global real estate is booming throughout the world, excluding the U.S. Places that are formerly remote, such as Romania or India, Ireland, which is a developing country, have had explosive growths in their real estate. And we see that as a trend that's continuing. So we're advising our clients to invest in real estate outside of the U.S. and to jump on this liquidity boom. And the exchange traded fund is really an outstanding way to do that. Yes?
Emily, Michelle here again in the United States. Would you be touching treasuries at this level?
Michelle, we don't really see treasuries as all that attractive. However, for our balanced growth portfolios, we do like treasuries just to add some stability.
But just a final question to you as well. It's Chinese New Year coming up. We've got amazing performance from Chinese equity markets. Have we got a bubble there or not?
How do you define a bubble? The valuation is looking stretched both in historic terms and relative to other markets. One of the problems with China is a very high level of savings, which is now being channeled into the Chinese market. I think an upside in the Chinese market, at least over the next 2 to 3 months, is limited. The risk of a correction has certainly been rising.
Bob, good to see you. Thanks very much indeed for joining us. Have a great weekend. Bob Parker, Vice Chairman of Asset Management at Credit Suisse. Emily, thank you for joining us as well. Emily Sanders, CEO of Sanders Financial Management.